Hi, everybody. I'm Dean Orrico, President and Chief Executive at Middlefield, and I'm here today with Mike Crawley, CEO of Northland Power, and we're providing all of you an opportunity to hear directly from Mike, who is the CEO of a company that has really grown tremendously in the renewable power area. It's a company started and based here in Canada, but now with operations around the world. And you know, this is a company that we've owned in our portfolios at Middlefield since the company IPO'd in 1997. I like to tell the story, Mike, where I still recall sitting across my boardroom table from James Temerty in 97, pitching us on a gas-fired electrical power producer. And you fast forward today, this is now a $10 billion market cap business, 70% coming from renewables. And as I alluded earlier, with a geographic footprint that really spans all corners of the world. So it's been quite a transformation. Mike joined the company in 2015. He's got a lot of experience in the renewables area, and he's really basically accelerated this push into renewables on behalf of Northland Power. So it's great to have him here with us to help us understand where he sees Northland Power in this rapidly growing and evolving sector. So maybe with that, Mike, why don't you give us your thoughts on kind of where the renewable sector is going? You know, what does this opportunity look like in dollars, and over what time period? Is this something that is going to be happening over the next 5 or 10 years, or are we kind of looking at the next 20 to 50 years?
Well, there's two dynamics that are really at whole going on now, which will extend through certainly the decade and beyond. Number one is governments around the world with their Paris obligations, and corporations with increasing pressure from investors to decarbonize. That you're going to see a tremendous conversion of any coal-fired or diesel-fired generation around the world to renewables over the next decade. So it will extend throughout Asia, throughout North America, Europe. We've got a big focus going forward in Asia, so we see that as one of the big opportunities where there still is a lot of carbon in those grids there. So we see a big opportunity there. So that's dynamic number one. There's just going to be a need for a lot of additional renewable power facilities globally. Dynamic number two is there's a ton of capital now chasing renewable power investments and environmentally or decarbonizing investments. So those two dynamics are happening at the same time. So our view is that means that it's a time for development. It's a time for developers who can create those investment vehicles. And that's what we're going to be doing over the next decade, creating new renewable investment vehicles, both for our own capital, but also for other capital too, which will be looking for opportunities to invest and struggling to find those opportunities as this flood of capital comes into the sector over this period of time. So those are the overarching dynamics. And I think what you'll start to see, and you're starting to see a bit of it, but certainly by the midpoint of the decade and increasingly after that, is a move to decarbonize beyond just electricity grids, right? And starting to move towards the more challenging parts of the economy. So that's fuels, industrial processes, and that's where Northland's starting to focus as well, to make sure that just as we're an early mover in offshore wind, we can also be an early mover there.
So before we dig into some of the things you just talked about, which I think are really interesting, get back to this geographic diversification, because we know it's one thing to manage a business with all of your employees, you know, say here in Toronto where your head office is, but you've got offices right around the world. So you've actually approached this from a much more decentralized strategy. How are you managing that, just given the type of growth and opportunities you're seeing in terms of using this more decentralized approach?
Sure. So, I mean, Northland was an early mover, as I said, in offshore wind. And so we see kind of the world rolling out that as follows, certainly in the next 7 to 10 years, is that any market that's got a good solar regime, lots of available land, we think increasingly solar will be the go-to source for new energy, and that will only accelerate with as the cost of storage, battery storage, and other storage technologies come down. Any country or region that has a land constraint, it doesn't have a lot of available land for solar panels or even onshore wind turbines, offshore wind will become the dominant source of new energy. And those are much larger, more complex projects with a much longer development cycle. So there's a bit of a moat around that as a developer. There's barriers to entry. And there's also a lot of competition for talent. So we've been very proactive as we built out our offshore wind assets in Europe, as we did each project, to grab some really talented people and start building up a team, which is currently based out of Hamburg. But at the same time, we've also got a large offshore wind project in Taiwan that's targeted to go to construction next year, a gigawatt sized project. And we've built up a team over the last few years around that project as well. So between those two hubs in Hamburg and Taipei, we've got a lot of this technical engineering, procurement, project management, offshore wind talent, which is much sought after now, as offshore wind is now on a percentage basis, the fastest growing renewable energy technology. So that's a bit how we've kind of identified these two hubs, these two offices, with a view that offshore wind's going to grow very fast in Europe, and continue to grow fast in Europe, and is now about to take off in Asia through Japan, Korea, and Taiwan. So that's in terms of project development and engineering offices. In terms of project origination, so pure development, originating opportunities, creating partnerships and all of that, we started decentralizing development about 2 or 3 years ago, and we've created these regional development offices, with one in London, overseeing Europe, one in Houston, which focuses on Latin America, one in Toronto, which focuses on North America, Canada, the US, and then we've got sister offices in Seoul and Tokyo, which focus on Northeast Asia. And so the idea is you create these, they're almost, I mean, it goes back to the beginning of my days in renewables, is creating almost like a mini development company with a team that has technical skills, commercial skills, origination skills, all of that in one team that can function relatively independently, and is boots on the ground, is staffed with people who know the local market. We make sure that they obviously are aligned with Northland values, Northland culture and everything, but they know the local market and they can source opportunities that we would never be able to find from Toronto. We balance that off with a very structured process with a central development office that screens all opportunities initially, manages all development budgets, and a centralized investment committee that does the initial approval on a new opportunity to start spending some material DevEx, and then has obviously a final investment approval on any deployment of capital. And that's how we balance off both decentralization, but some central control over budgets and over allocation of capital.
So, sounds like a very thoughtful approach when you're growing as rapidly as you are. And then in terms of growth, and we know that there's really two forms of capital. You've got your human capital, which you've been talking about, and then you've got, you know, basically dollars and cents to help fuel this. Talk a little bit about how, as you've grown and grown Northland, how your shareholder base has evolved, and what type of feedback are you getting from these large shareholders? And we see the BlackRocks of the world basically leading the way, and we know the pension funds are clearly focused on this as well. Has that caused a massive, or in any way even a small, evolution in your shareholder base? Because we do need that support of shareholders to continue to fuel the type of growth you're forecasting.
Well, we're seeing much more interest from European institutional investors in particular, but European investors in general, and to a lesser degree, but still a material degree, US investors. So a lot of that is driven by offshore wind and what we've been doing and what we are planning to do in that category. So if you look we're a top 10 player in terms of offshore wind. I don't know if we're number 4, number 5 in terms of installed and operating capacity, but we also have a substantial growth pipeline. And if you look at the other players in the sector, there's a number of utilities certainly, but in terms of looking for more of a pure play, right? In terms of listed companies, there's Ørsted and ourselves. We get kind of roughly 60% of our EBITDA comes from offshore wind, and it will increase. And so we think one of the reasons why we're getting increased interest from European investors, they're looking for exposure to the growth of offshore wind over the next decade. They see how fast it's going to grow. And then they look at our valuation relative to Ørsted, I suppose, and or at least to look for some diversification with another investment rather. And they look to Northland for that. So I think that's one of the reasons why we've started seeing our investor base expand. And it's also just the companies growing. So once you reach a certain size, then you start getting on the radar of investors internationally.
Yeah, it's interesting because we've had an office at Middlefield in the UK since the early 90s. I started hearing and receiving questions about ESG and impact investing there well before we started hearing it here in North America. Sounds like, although you didn't state that specifically, that Europe is ahead of North America, and you're seeing that in your investor base. Do you think that still is the case today, and it's just a matter of time here before North American and U.S. investors in particular start embracing this as much as the Europeans have?
Indeed, but I would say in the last 6 to 9 months, we've seen a marked shift amongst North American institutional investors. So I think the gap between the delay factor, or the gap, whatever you want to call it, between what's going on in Europe and what's going on in North America really has narrowed considerably in the last 6 to 9 months. And we're also starting to see it in Asia. We're doing an increasing amount of marketing in Asia and just talking to investors there, particularly since Hai Long's coming up to going into construction. We're active in Korea and Japan on offshore wind, and there's an increasing interest there as well. So I think the next wave as it moves around the world is going to come to Asia, and that's where we think there's a good opportunity with Northland, with some assets in Asia, to attract an investor base from that part of the world too.
Yeah, it makes sense. Let's talk a little bit about ESG. I know you covered this at your Investor Day last week, and interesting, given how significant Northland is in the renewable space. You look at its ESG rating, which is done by some reputable third-party firms, and it's not as high as you would have thought. Give us your thoughts on that in terms of some of your strategies to make Northland, in some people's eyes, more ESG compliant.
Well, I think there's some real low-hanging fruit in that regard. So, the last few years, Northland has grown rapidly through some very large projects in Europe, and now this large project in Taiwan. So that's been a lot of the focus of the company, and it's been growing rapidly to make sure we could deliver on those projects. Arguably, we probably could have paid more attention to ESG reporting. We are now ramping up. We've hired a senior person in charge of ESG about a year ago. And she has really taken a charge of ramping up our reporting. A lot of it for us is just better reporting on what we're already doing. And that's the first step. We will begin reporting in 2021 according to SASB. And so you'll start seeing much better reporting coming out of Northland soon, and it'll make it much easier for investors to make their investment decisions.
Yeah, makes sense. You've made a number of comments there about offshore wind, where you are one of the leading players globally, bumping it to, say, the Ørsteds of the world. And recently, we've seen some reports where it's becoming much more competitive in acquiring, leases for ocean floors to locate your offshore wind farms, if you will. Give us your thoughts on that, how that's evolving, how competitive a space is that becoming, and does that potentially create a headwind for Northland's growth over time?
It's a good question. So I mentioned Ørsted before, one of the other major players in offshore wind. They are certainly much larger than us. I mean, they've been developing offshore wind longer than us, and they're a much larger company to begin with. One of the benefits of being a bit smaller than Ørsted is we can actually pick and choose which offshore markets we go into. We don't need to be present in every single offshore market to grow, to have meaningful accretive growth. So for example, the US Northeast is a market where we still have not done anything. We've looked at a number of opportunities the last few years. The US Northeast is going to be big for offshore wind, but the entry cost, which I think what you're referring to, the way that the lease auctions were run, the way that it's structured, really drove up the entry costs substantially in that market, and we could never get comfortable with that. I'm not saying we'll never enter into the Northeast of the US, but we certainly haven't seen an opportunity that was acceptable to us yet. So that's one of the things. We can pick and choose the markets that have what we view as reasonable entry costs, and also what we view as having procurement processes for offtake, PPAs, that allow us to be compete and still secure attractive returns. So for example, in Japan, the procurements happen on a zonal basis. So they happen only within a certain zone. So all the projects within that particular zone compete against each other, but you're not competing against every other project in Japan. And it's just the way it's structured. And the selection is based partially on price, but also about 50% on other factors that relate to the engagement of the community, the construction plan, the business plan, and the experience of the developers behind those projects, which is an advantage, obviously, to us. So we focus on opportunities like that. The entry into Poland that we announced about 10 days ago is another good example of that, where we've entered into Poland with the oil and gas major from Poland, PKN Orlen, very large player that had been developing a large offshore wind project, but needed a partner who had experience in developing and operating offshore wind projects, and that was a way to enter that market. So that's what I would say. We're selective in terms of the markets that we enter, and also the partners that we pick.
Yeah, it sounds like certainly there are areas with more challenges, but you're trying to stay pretty opportunistic by identifying local partners and local opportunities where you can lend your expertise, just like you did in Poland.
That's exactly right, and we're trying to get ahead of it too. So offshore wind is a bit like solar and onshore wind was maybe 10 or 15 years ago, where new markets were opening up, and where regulators and governments were being had to offer long-term contracts, sovereign-backed PPAs, to attract the supply chain, to attract developers. So that's what we like about it. It's very high-quality cash flows, nice, solid offtake agreements. But the key is you got to move in there early and get into those markets early, and that's what we're looking to do.
So you mentioned PPAs, Mike. So over the last several years, you've seen PPAs now directly with corporate off-takers, whereas historically it had been kind of selling into the utilities. Explain to us how that's evolved and how Northland's played a role in that, and where do you see that going? Is that a trend that you think will continue in a significant way?
I think it's a trend that will continue and accelerate, certainly for onshore renewables. I think it is an opportunity. So initially, you saw kind of the typical players like Google, Facebook, Amazon running their procurements for renewable power, and they very quickly got quite sophisticated in terms of running those procurements. So they were very efficient and therefore very competitive, right? But now you're seeing a lot more corporations come in with mandates to procure renewable power. So I think the demand for all ESG driven, right? ESG investor driven, the demand for renewable power from corporate off-takers is going to increase in the coming years, and there'll be a much broader diversity of buyers. So it's something that we're certainly conscious of. And I think it will also eventually be an opportunity for offshore wind. I think initially in these new markets, it's going to be government-backed PPAs, but eventually there will be opportunities there. And as you've seen in Taiwan, Ørsted, who's also present in Taiwan, signed a commercial PPA with a large semiconductor manufacturer there. So they've still got their utility PPA that they bid for in the auction and secured, but then this kind of sits on top of that because this semiconductor manufacturer wanted to significantly increase their renewable power and their large load in that country. So there's opportunities like that will present.
Yeah, fascinating. You alluded to this earlier in terms of storage, and there are some people who still believe that, you know, when you think about baseload power and wind and solar in particular in its role in electrical power generation, you know, where do you see the whole storage part of the equation going? And do you think the technology is going to improve so much so that, you know, we know wind and solar are competitive from an economic standpoint today, but where do you see it as far as 24/7 electrical power generation goes?
Well, there's certainly advances being made in battery storage, lithium ion. So you're seeing increasingly in certain markets, wind projects, solar projects being built with an embedded battery. We've got a project in New York that we're hoping to bring to construction later this year that has an embedded battery within the project to enhance the value of the energy from that project. So you're going to see that. I think the duration and the cost of batteries duration will go up, the cost will come down in the coming years. So you'll see more and more cases and more markets where battery storage embedded into a renewable power project is cost effective and cost competitive with grid power and with alternative sources of new generation. So you'll see that. The other thing that's interesting to watch will be hydrogen. And I think it's particularly interesting with respect to offshore wind, where onshore renewables tend to be fairly far away from load centers and from industrial centers. Offshore wind, since it's, you know, off in the ocean, it comes onshore often fairly close to industrial centers and just load centers, population centers. So there's a much better synergy between green electrons from an offshore wind project to some degree to feed into an electrolyzer to create green hydrogen than there is perhaps in a lot of cases with onshore renewables. So I think there's an interesting opportunity there that will emerge with offshore wind going forward, both in terms of just a bespoke project to convert your electrons to a fuel, to hydrogen, but also to use it as a storage medium as well.
Sounds like there's lots of opportunities across the whole renewable spectrum. Let's just talk a little bit about funding that growth. We touched on your shareholder base, but clearly this is going to require, you know, billions upon billions of dollars for Northland, trillions of dollars across the sector as a whole. What are your thoughts on funding that growth over time? Are you looking at things like, you know, these green corporate bond issuances that we've seen a variety of companies issue, or how are you approaching that?
So at our investor day last week or a few days ago, we announced that we were launching our green financing framework, which then sets ourselves up to be able to issue green bonds. So we think that's certainly an opportunity to fund some of the growth going forward. We would also look at sell downs or on some of these larger projects to bring in some third-party equity alongside our own. There's a lot of interest in investing, particularly in offshore wind projects. So it's a good opportunity for us to enhance our return to those projects and help fund the equity and minimize the use of dilutive equity to fund those projects at Northland. So and then of course there's asset level financing, which is typically what we've done, non-recourse asset level financing.
Interesting. So I'll save the best question for last, because I get asked this often from my clients. This is a sector, renewables in particular, that's had a great run. You know, how do you respond to that in terms of, you know, the valuations are at the higher end of the range when you look at the broader market? Where do you see Northland going in the next 5 or 10 years, and why are current valuations reasonable or not, in your view, for Northland Power?
Well, the most important thing, I mean, the catchphrase these days is energy transition, right? But I mean, it's always been the case. The energy sector has constantly been evolving, and there's inflection points, right? Which is where there's opportunity. So what we see as a big opportunity for this company over the next decade is certainly offshore wind. That those projects are more complex, larger. They command a better return than onshore renewables, and they have better quality offtake. So our path to success is to make sure we get into these new markets early, create these projects, create these investment vehicles for ourselves and for other equity as well, other capital as well. So that I think is an area where we should be able to deliver superior returns than in onshore renewables globally. Number two is the nature of Northland. I mean, I've always referred to Northland as being conservatively entrepreneurial, which is of course an oxymoron, right? But it defines the company, right? It's always looking at what's out there on the horizon and figuring out how we can get there and be an early mover. But for every single investment decision that we make, and in terms of project execution, applying extraordinary rigor. And that is how the company will continue to grow and thrive, which means looking ahead. Where's the next big growth area going to be? So we've got a team looking at renewable fuels, both renewable natural gas, hydrogen, and looking at other growth opportunities to make sure that we're at the forefront as the next wave of decarbonization will continue. You asked at the beginning how long this is going to continue for. Well, you look at these net zero targets, they go out to 2040, 2050. There's going to be lots of opportunity. And the more complicated, the more difficult stuff comes towards the back end of this whole process of decarbonization. And that's where companies like Northland that have strong engineering talent, entrepreneurial people, creative minds, that's where we should be able to thrive in coming up with these more complex solutions to fully decarbonize the economy over the next 10, 20, 30 years.
Excellent. Based on the fundamentals, which is exactly what I like to hear as an investor. Well, keep up the great work, Mike. You're certainly making huge strides for Northland Power, huge strides in the renewable sector. So all the best going forward.
Thank you very much for your time today.